The trigger for this week's video blog was a news item in the Veterinary Record reporting that a pet insurance company had linked up with an online pharmacy owned by one of the largest corporate consolidators in the UK. The business logic, of course, is clear for both parties, although consumers might perceive some potential conflicts of interest. But the issue for most practice owners and managers is a recognition that every veterinary practice operates at least two businesses, the delivery of professional services on the one hand and the sale of pharmaceutical and other animal health products on the other. The two businesses are dependent, of course, on each other, and each of them would be expected to make a significant, comparable contribution to the overall financial health of the practice. One of the problems in doing the sums to find out what's happening in any particular practice is that most practice financial accounts don't separately identify the revenue generated by the sale of products. Part of the reason, of course, is that although it's quite easy to identify income from over-the-counter product sales, many of the consumables, drugs, anesthetics and other products used in delivering surgical, diagnostic and other procedures are frequently not charged out individually but are packaged up as part of the overall charge for the procedure. Similarly, with vaccines and other injections, it's not easy to separate the drugs and the service components. Nonetheless, it's perfectly possible to establish some rules of thumb to estimate the proportion of income derived from the drugs, consumables and all other products used in delivering such services, and then to compare the total product income with the direct costs involved. Over the years with client practices, I've found that the net profit from product sales, after taking into account an appropriate share of staff and overhead costs, is generally healthy, but not excessive in the 15 to 18% range. But bearing in mind that when the overall practice margin is 10% or less, and in the UK the current median value for practices contributing to the SPIV's profitability survey is in that order of magnitude, the contribution made by the sale of professional services is clearly inadequate and frequently negative. Veterinary practices in the UK have been over-reliant on product sales for many years. But perhaps the biggest problem for the practicing arm of our profession is that too many practice owners simply don't have a sufficient understanding of those key performance indicators which directly influence the financial health of their own business. How about you? If you own or manage a veterinary practice, can you be confident that the professional services component of your business is not being kept afloat by your pharmacy? See you next time.